Ladies and gentlemen, good day and welcome to Ramco Cements Q3 FY24 earnings conference call, hosted by Batliwala and Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Srivastava from B&K Securities India Private Limited. Thank you, and over to you, sir.
Yeah, thank you, Manav. Good afternoon, everyone. On behalf of B&K Securities, welcome you all to the 3Q FY24 earnings conference call of the Ramco Cements. We would like to thank the management for giving us the opportunity to host the call. We have with us from the management Mr. M.F. Faruqui, Chairman, Mr. A.V. Dharmakrishnan, CEO, Mr. S. Vaidyanathan, CFO. So we would start the call with the opening remarks from the Chairman, Mr. M.F. Faruqui, and which will be followed by the Q&A. Over to you, sir.
Thank you very much. A very good afternoon to all of you. On behalf of Ramco Cements, I very warmly welcome you all to the earnings call of the Ramco Cement to discuss the unaudited results for third quarter for the year 2023-24. We hope you would have seen our results and updates by this time. The cement demand was affected due to heavy rain in Tamil Nadu and Andhra Pradesh due to cyclone in December 23. The cement prices have been under pressure during this quarter. The key highlights of our performance for the current quarter is sale of cement has improved by 10%. The share of premium products have improved to 27% from 26% in the corresponding period. The cement utilization rate for the current quarter is 74% as against 70% in the corresponding period. Net revenue for the current quarter has grown by 5%. EBITDA for the current quarter is 402 crore rupees as against rupees 294 crores in the corresponding period. EBITDA margin for the current quarter is 19% as against 15% in the corresponding period. Blended EBITDA per ton for the current quarter is rupees 1007 as against rupees 808 in the corresponding period with a growth of 25%. Coming to fuel prices, the current spot CIF price of pet coke is $118 to $120. The pet coke prices are key to watch. Our pet coke consumption for the current quarter stands at 51% for the current quarter. The reduction in fuel prices and change in utility of sale of wind power to captive use has helped us to reduce the overall power cost. During the quarter, the company had increased the clinker capacity by 0.65 MTPA at Kolimigundla and 0.35 MTPA at Ariyalur through process optimization. With this, the installed capacity of clinker stands at 16 MTPA. Our in-house team had carried out the debottlenecking activities that included design, engineering, and execution. The company has identified the opportunities for debottlenecking of cement capacity aggregating to 1 MTPA. The company proposes to establish a WHRS of 10 megawatt capacity at its RR Nagar plant at a cost of rupees 153 crores, which is to be commissioned by March 2025. The company is in the process of getting necessary statutory permissions. With the establishment of WHRS at RR Nagar, the aggregate installed capacity of the company's WHRS would increase from 43 megawatt to 53 megawatt by the financial year 2025. The company proposes to double the clinker capacity in Kolimigundla to 6.30 MTPA and double the cement capacity to 3 MTPA with 15 megawatt of WHRS at an estimated project cost of rupees 1,250 crores. This expansion is scheduled to be commissioned in the financial year 2026. Consequently, the aggregate installed capacity of the company would reach 19 MTPA for clinker and 26 MTPA for cement. The aggregate WHRS capacity would further increase to 68 megawatt by FY26. In Kolimigundla, TPP of 18 megawatt will be commissioned in March 24 and railway siding will be commissioned in June 24. The capacity of dry mixed products in AP and Odisha will be commissioned during March 24. The expansion of grinding plant from 0.9 MTPA to 1.8 MTPA in Odisha will be commissioned in March 24. During Q3 FY24, the company has incurred rupees 385 crores towards ongoing capex. Earlier, we had guided rupees 900 crores for FY24, which was subsequently revised to rupees 1,600 crores consequent to the acquisition of mining lands from Prism Cements, among other capex. Now, the guidance is further revised to rupees 2,000 crores for FY24, given the capex incurred for debottlenecking and increased momentum of land acquisition for Bommanahalli project. The capex guidance for FY25 will be rupees 1,700 crores, which will be funded predominantly through internal accruals. The net debt is on 31/3 is rupees 4,993 crores, including working capital borrowings, and the net debt to EBITDA is at 3.22 times. The average cost of debt for the 9 months financial year 24 is at 7.82% as against 6.16% in 9 months of financial year 23 due to the increase in the market rates. So with this brief opening remark, I hand over to my other colleagues to take you further on the details of the current quarter's performance. Thank you very much.
Sorry, I'm still not sure about that.
Yes, sir, this is Vaidyanathan. I would like to give you a brief note on borrowings for the benefit of the all. Our peak borrowing was around 3,000 crores in the year FY 2013 and 14. At that time, our capacity was per annum. Our sale was 9 million ton per annum. Our average EBITDA for the 5 years period, that is FY 10 to FY 14, was 840 crores. Our average net debt to EBITDA was 3.5 times for a 5-year period. From FY 2019 to 24, we started spending capex for the capacity additions. We have spent so far about 9,800 crores towards that. Now our capacity is 22 million ton, an increase of about 83% from the level of 2014. Our sale volume is 17 million ton, an increase of 88% from the year FY24, 14. Our average EBITDA for a 5-year period, that is FY22 to FY24, is 1,400 crores. Our average net debt to EBITDA is still 3.5 times only, has not increased. To increase the capacity from 12 million ton to 22 million ton, we have spent about 9,800 crores so far. Out of 9,800 crores, 7,800 crores were from free cash flow from operations for the entire period. Whereas our borrowings have increased only by 2,000 crores since 2013-14. This I would like to bring to your notice of all. Over to question and answers, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Parth Bhavsar from Investec. Please go ahead.
Yeah. Hi, sir. Sir, you can hear me?
Yes,
Sir,
sir.
we can hear you. Please go
Yeah.
ahead.
Sir, considering the, so I have two questions. Considering the capex that you've announced in Kurnool, taking that into consideration, what would be our peak net debt going ahead?
See, the peak debt will continue to remain same because we have planned to meet the capex through internal accruals predominantly.
So it would be 5,000 crores?
Yes,
Okay.
because we expect free cash flow of around 1700 crores in this financial year, that is FY25.
Okay. And see, the other thing is on volumes. So, sir, what is your volume guidance for Q4 and FY25?
Q4 will be around 5 million ton, so 17.5 million ton for the full year.
Sir, how much?
17.5 million ton for the full year and 5 million ton for Q4.
Got it. And FY25?
25 around 19 to 20 million ton.
Okay. And sir, at current, so I guess our kcal cost has declined to 1.64. So how do we see that going ahead in Q4?
Q4 it will remain same or moderately come down. So for all practical purposes, you can assume the same cost per ton.
Okay. And sir, so there wouldn't be any benefit coming from so PLF was 25%. Won't that increase going ahead from captive wind?
See, the wind power capacity 25% is the normal PLF for the wind power. So that will not increase. So we mentioned that 25% of PLF is only from wind power.
Okay. So this won't increase going ahead.
That remains the same because the wind pattern for over a long period of time, the PLF average PLF is coming only at 25%.
Okay, sir. Thank you. Those are my questions, sir. Thank you for answering.
Thank you. A reminder to all participants, you may press star and one to ask questions. We have our next question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. Sir, again, coming back to on the capex front, I listened to your opening remarks where you mentioned about the historical numbers. I just wanted to add my numbers to that. So in last 7 years, so from FY19 to FY25, if I look at the capex, we will be spending or the spend. So 12,173 odd crores. So, and the capacity that we will be adding by FY25 would be a 7.2 million tons. So that is a close to 1,700 crore per year and 1,700 crore per million ton. So, and this will be the third year where we are increasing our capex guidance. So, if you can help us in terms of why this is happening. So in FY22, 23, and this 24. And then what gives us confidence that for whatever the capex we have said for FY25 also will not further increase.
See the increase in capex for the current year is mainly due to the addition of Prism land, the mining land. That is 500 crores. And we started buying lands for the Bomanahalli project.
Sorry to interrupt, Mr. Shravan, there is a lot of disturbance at your end.
Is it fine now?
A bit better. Please go ahead.
Yeah, sir, my point was I am trying to tell is that the kind of capex we are doing per year or per million ton is one of the highest in the entire industry. And I understand the pricing and the volume is not in our control. It is the market driven. But in terms of the cost efficiencies, if somebody has to look at that, if we are spending so much,
then our efficiency or the OPEX per ton should be much lower, which is not the case. If we look at the historical numbers, our costs have rather increased. Definitely because of the power and fuel cost, that is the case. But despite that, also it is not reflecting. So just trying to understand why we are doing such a high capex and versus we are not able to and compared to the street. So in terms of the per ton, if you look at it, is at $200 per ton versus all other players are putting at $70 to $80 per million ton. So at least it should result in a better efficiency. Our profitability has to be a much better, which is not the case. So that's the point I just wanted to put forward.
So you have to see whether $200 or $70. You have to see what are the facilities you are creating at the day number one. See, in the earlier cases, if you see our capex is much lower because, for example, the railway siding, the colony, as well as the waste heat recovery, thermal plants, all these things are added over a period of time. Whereas the Kurnool plant, all the facilities are created the day number one. See, that is why the initial capex seems to be high compared to others because normally the companies will add all these capacities over a period of time, not the day number one. But since at the point of time the coal prices were very high, all these things, unless now the trend is for green energy, all these things, unless I invest that, I cannot be competitive. So you should understand that. That is why even though for first phase we spent over 3,000 crores for the same capacity, second phase is going to be only 1,250 crores because already all the infrastructure have been created. Most of the benefits you can see in the coming years, and most of the benefits accrue in full because the benefits are accrued only partially during the current year. All the benefits it will accrue during the year 24-25.
Okay. Got it, sir. Thank you. All the best.
Thank you, sir. We have our next question from the line of Naveen Shahdev from ICICI Securities. Please go ahead. Mr. Naveen?
Yeah, hi. Can you hear me?
Yes, sir. We can hear you now. Please go ahead.
Yeah, great. So, thank you for the opportunity. Sir, I would request if you can give the breakup of the capex. This year, the revision I can understand, as you said, is for the land that you are buying. So 1,600 crore becomes 2,000 crore. But next year, what is the breakup for 1,700 crore? Because if the capex is 1,400 odd crore, 1,250 for Kurnool line 2, which is again spread over 2 years, which is 25-26. So broadly, let's say 700 crore each year. Then what is the extra 1,000 crore that you are budgeting for? If you could just help me understand that. Thank you.
See, next year for Kurnool second line, we have budgeted 750 crores. Land for Bomanahalli, we have budgeted for around 200 crores. Maintenance capex 300 crores. Balance leftover Kurnool line 1 project 200 crores. RR Nagar WHRS 100 crores. 10,700 crores.
Understood. That's really, really helpful. So, but one important point which you said is that the net debt has peaked out at 5,000 crore. Is that the commentary that you are firm on, that net debt is peaking out at 5,000 crore?
Yes.
So which also, can I request your comment on the same thing sustaining even if we were to look at Bomanahalli project, because there, if the land acquisition is at a blazing pace, would it also mean that we are looking at that project announcement in the coming 1 to 2 quarters, or it could be keeping in mind that net debt does not really go beyond this? How is the thought process on that?
So first we will complete the land acquisition for Bomanahalli. The announcement with regard to plant thing will come after the board approval is.
No, it will take minimum 18 months.
18 months.
Not 1 or 2 quarters, it will take minimum 18 months. Announcement will come minimum 12 to 18 months.
Oh, so in that case there is fair amount of certainty that net debt will remain in this range and as the company improves on EBITDA, net debt to EBITDA will only improve from here on. Is that a correct understanding?
No, net EBITDA will not increase.
See, Naveen, that is what our plan is, to make sure that our free cash flow from operations will be used for capex. So we don't propose to add more borrowing for capex. That is the idea that we are carrying on.
Understood.
So Naveen, apart from that, as we told you any number of times, there are certain non-core assets we want to monetize. See, already we identified certain non-core assets to monetize, but because of the political situation, all these things, we not got the right value. See, if we get the right value, definitely we can monetize to the extent of 500-600 crores. Okay, if necessary, I will use that for my projects. So with that, we are very, very confident that net debt will not go beyond 5,000 crores.
Yeah, sure. And I think the Kurnool line 2 will also have some more efficiency because the mines that we are trying to utilize for
You are right, you are right. That is why we are confident. That is why Mr. Vaidyanathan is very confident that free cash flow will meet the capacity requirements.
Understood. Very helpful. Just one last question. This shift from wind mill to captive purpose, so are all the benefits captured into the base for the quarter, or there is some
more benefit? No. This quarter, unfortunately, third quarter is not a season. See, the benefit, definitely even the second quarter, normally full benefits might have come, but we got the permission to transport to captive mines, captive consumption only little later. So next year, you'll get the full benefit.
Naveen, this year 3 quarters benefit only we got it because we started doing it from July. Okay, next year we'll get the full benefit.
I appreciate that. I was only checking because it's seasonal. I believe that business is seasonal. It's Q2 and Q3 heavy, or how should one look at it?
No, see, anyway, whatever power generated is banked. So as and when it is available, it is used.
No, the power generation normally is between May 15th to July 15th to September 15th. May 15th to September 15th. May 15th to September 15th.
Understood. No, fair point. So we can expect better performance. But great. Thank you so much for the clarification on capex. That will really help. Thank you.
Thank you, sir. We have our next question from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi. Good afternoon. So just on the question of the peak debt and capex. So while I see that your EBITDA is about close to quarterly EBITDA is about 400 crores. So like if I just take analyze of that, 1600 crores plus, I mean, and out of that you have to pay about 400 crores in interest, about another 100 crores in dividend taxes and also 150. So 500, 550 is actually gone. So we are actually left with like 1000 odd crores in terms of like I can say maybe OCF. So how will we manage with same level of debt? Then are we either expecting prices to go up, or like we can think of like big non-core asset sales, as you said, of maybe 400, 500 crores?
Both next year volume will also go up. Next year definitely we like to increase volume by another 2.5 million tons volume.
But you don't have capacity to do that. You have clinker utilization is 90%.
No, we have the capacity for the quarter, but capacity for 9 months is still we have capacity. We can go up to 22 million tons, cement capacity. So this year we will reach 17.5, another 2-3 million tons capacity is still available.
What would be your clinker utilization for 9 months? I mean clinker volumes, production.
Clinker volume production is around 10.5 million.
Okay, sure. And also, could you quantify the impact due to the flooding in Tamil Nadu? How much volume was lost because of that?
Around 300,000 tons.
Right. And is it
not necessarily not necessarily only flood alone, because there was a flood, then Diwali holidays, Puja holidays. See, all these things come together. Also monsoon. See, if you take first 6 months, we have done almost 4.5 each.
Yeah.
And the third quarter we done 4.4 or 4.4. So the difference is only because the floods, also holidays and monsoon. And the fourth quarter we are confident we will do fine.
Right. And generally, like what we have been hearing is that prices have corrected very sharply actually. So, like, what is exactly the problem there? Like now, we are in the peak demand period actually. So any sense you can give on that? Why
You'll
we
be
are
knowing better. The price are depending upon players, this one. So you don't worry, I will take care that the people can't sell at this price all the time. See, one day or other, people should worry about return on investment, all these things. We are confident the prices will come back. Because at these prices, the company can't sustain.
sure? I'll come back in the queue. Thanks.
Thank you, sir. A reminder to all participants, you may press star and one to ask questions. We have our next question from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hi, thank you. The first question on the CapEx. You outlined the details for FY25. As we look at FY26, given you won't have any pending CapEx from Concall 1, I believe land acquisition should more or less be complete. So do we see a steep drop in CapEx in 26? Or do you have continued land acquisition and any other pending CapEx for maybe...
26, for 26 we will discuss little later, Satyadeep. So 25 we have given guidance. 26 we will discuss little later.
In the timeline for completion, I think in the previous call you had mentioned that the new line can come in 12 to 15 months. You're looking at now about 2 years. Is it maybe
because
possible?
we are yet to get environmental clearance. So we get environmental clearance. Nowadays it's taking a lot more time than before.
Elections are also there.
Elections are also there. So once they notify the elections in 3 months, nothing will happen. We are considering all these things only. Just we are telling outer limit we are giving because this time we don't want to go wrong. Telling that okay, 15 months, I don't want to take 18 months. Then people think okay, there's a delay in project. Now we want to be very practical.
Satyadeep, we are also planning aligning our capex to our cash generation. That is also to keep it in mind. If we speed up the capex, the borrowings will go up.
Okay. Just lastly on the volume that you've seen in January, have you been able to recoup some of that loss in, how's the trajectory been so far in Q?
So I told you now we'll do 5 million tons. Then you can understand whether we can recoup or not.
Okay. Thank you so much. I wish you all the best.
Thank you, yeah.
Thank you, sir. A reminder to all participants, you may press star and one to ask questions. We have our next question from the line of Vikram from Vikram Securities. Please go ahead.
Good afternoon, gentlemen, and congratulations again on a great set of margins at least. Just one question. I think everything.
Thank you, yeah. You are the first person to congratulate before asking about capex and borrowings. Thank you very much.
No,
Thank you for all your compliments.
I saw some things which were very, very nice to me. And so just one, all these questions were answered about the volume. Only one thing then is I noticed that you would have introduced ESOP program. Is that a first for the company or is it first for the year?
No, already we have ESOP program. See that almost 70% already we have. See, last 5 years we are running that. 70% we have first 12 lakh options were 12 lakh options were reserved. Out of that, to my knowledge, we have given around 7 lakh options have already been granted, 7.5. So this is over 5-6 years, not today. Just over 5-6 years we will be giving.
Okay. Thank you, sir. Thank you very much. Thank you very much again.
Thank you, sir. We have our next question from the line of Rishikesh Bhagat from Kotak Mutual Funds. Please go ahead.
Good afternoon. Thank you for this opportunity. Just want a management sense did we ever consider probably pushing back this capex in the sense of urgency? I just wanted to understand the sense of urgency because if I take your earlier comment, we have reasonable runway to reach 22 million ton volume. I'm trying to, if you can help me understand why take such a, why this so urgency in this capex, in sense that had we done it 1 year down the line, the deal balance sheet would have been much better. So if you can help me understand, that will be helpful. Thank you.
No, that is why we are very clear now. We told we are not going to compete in 1 year. We told we will compete in 2 years. Now, see, I have to make application for environmental clearance. If I have to make application for environmental clearance, board resolution is necessary. If I pass the board resolution, I have to intimate the stock exchanges. See, unlike before, now the regulatory information is such that, see, all these things follow in a flow. So unless I pass the board resolution announced today, even I can't complete the project in 2 years' time.
Okay.
So I'm not rushing. In fact, these things are necessary today because the environmental clearances take a lot more time than used to before.
Okay. Thank
So that is why we clearly be told it will be completed by 26.
Okay.
Sir, till 26 we have enough capacity to cater the market needs. So from 26 onwards we should be ready now. So that is why. In fact, it is not that we are rushing in.
Okay.
It is well planned, well organized only.
No, I just feel that probably it's considering brownfield, the gestation period should be shorter, so we could have.
Gestation period is environmental clearance same. See, gestation period only land purchase is not there. That's all. Okay. But in fact, now the environmental clearances, the public hearing, all the procedures are same. It's no less.
Okay. Sure. Thank you.
Thank you, sir. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, good afternoon. Thank you, sir. Just few clarifications with regards to the timeline. We are expecting end of FY26 for this expansion completion?
Yes.
Okay. And in this 1,700 crores capex for next year, which you've guided, how much of this 1,250 crores will be included in that?
I've already mentioned about 750 crores for next financial year.
Okay. And sir, generally for our asset base, what sort of maintenance capex should we expect on an ongoing basis?
200 to 250 crores per annum.
Understood. All right. Okay. All right. Thank you. That's all from my side.
So the last year, the maintenance capex also a little bit more because we have debottleneck. Almost we created capacity almost 1 million ton. We proposed to
1 million ton.
We proposed to create another 1 million tons also. That is why even whatever capex, apex, whatever I'm mentioning is little high.
Got it. Thank you.
Thank you, sir. We have our next question from the line of Raghav Malik from Jefferies. Please go ahead.
Yeah, hi. Am I audible?
Yes, sir, you are audible. Please go ahead with the question.
Okay. Thank you for the opportunity, sir. Just wanted some color, if you could be a bit specific on what we're seeing on pricing, maybe overall as well as, specifically to the south and the east. If you could give us some color on that, please.
Sorry, it's not audible, sir. Can you please?
No, the prices are little volatile, so I can't give proper guidance on the prices. So in fact, we are only one of the last to give the Concall. So whatever guidance given by my colleagues in different in different companies, that will be my guidance. It cannot be different from others.
We have the line disconnected with the participant. We have our next question from the line of Parth Bhavsar from Investec. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, I didn't catch the number that you mentioned on the sales volume lost during the quarter, the potential sales volume. Was it 3,000 tons?
Sorry, I couldn't understand your question.
You mentioned a number, potential volume lost during Q3 because of cyclone and rain.
Rain.
No, see, first quarter we had done 4.5, second quarter we had done 4.5. Normally, third quarter also we had done 4.5. That was our plan. We could not do that because rains in Chennai, not only in Chennai, also entire southern districts, which is our core market, that was underwater almost for 15 days. So that is one of the reasons. Then general monsoon across our markets. Third is number of holidays in the east as well as the south, Puja holidays as well as Deepavali. These things affected our sales. But if you see the corresponding year of last year, definitely we grow. In spite of rains, in spite of holidays, all these things, if you see year on year, definitely we have grown. Even though the monsoon was very vigorous and our core market was affected.
The second question is on the debottlenecking. We've debottlenecked approximately 1 million ton of clinker. So what would be the cost? Like what have we spent on this?
Be difficult to identify, sir, because we have spent it in all the factories, different factories. So it will be difficult to.
No, I told you it will be around 40-50 crores.
40-50
crores. That is why I told you that normal this one will be around 200 crores. This year we spent more, around 250 to 275 crores we'll be spending now.
Okay. And sir, correct me if I'm wrong. I just pulled this one presentation from Q2 FY23. So there we had spelled out our capex plans, and that included approximately 250 crores of towards Bomanali land acquisition. So when we revised our capex to 1600, didn't that include Bomanali land acquisition? Am I missing something?
Continuously, land acquisition in Bomanali is still.
Sometimes you get pressured to buy. Sometimes some people offer, okay, I want to give you 100 acres, then immediately I have to grab, otherwise it is impossible. These are the land purchases. Sometimes even 2 months, 3 months, you may not be able to buy. Sometimes some people rush, okay, buy the land because maybe some daughter's marriage or relative's marriage. These things bound to happen. So exact guidance is difficult, maybe 100 crores here and there, because we would buy huge land, almost 3,000 acres of land. So the effort is continuous, and whenever the opportunity comes, we have to grab the land.
Okay, so sir, this 500 crores that you mentioned, would this be over and above 250 crores?
Yeah.
Or it is?
Yeah, next year.
It is over and above 250 crores.
Sorry, please come back again.
This 500 crores of incremental spend that is towards Bomanali land acquisition, is this over and above your 250 crore mentioned earlier?
See, earlier we mentioned about 100. Earlier we mentioned about 100 crores.
In H2 FY23.
I think so. I don't have the numbers right now.
Yeah. Okay. Done, sir. Thank you so much.
Okay.
Thank you, sir. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Rajesh Prasad from HDFC Securities. Please go ahead. Excuse me, Mr. Rajesh.
Yeah, hi, this is Rajesh Ravi here from HDFC Securities. Sir, my question pertains to your clinker utilization. Hello, am I audible?
Yes, sir.
Yeah, hi, sir. Clinker utilization, you mentioned 10 million ton production, which is 9 months, works out to be 90% utilization. And this year you are targeting around 17.5 ton cement production, right? Full year.
Okay.
So next year at what sort of volume number you're looking at? Is it 20 million ton? So around 20% volume growth?
19 to 20 million ton we have projected.
Okay, so there you would be close to 100% clinker utilization. Is this understanding correct? Because for 9 months, the blending...
It depends on the blending ratio.
Correct. So 9 months it is coming out close to 1.3x.
Okay.
So at how do you plan to take your blending ratio up?
It depends on the market condition, na.
Debottlenecking capacity has come up now.
So the debottlenecked capacity is 1 million ton is coming up now, which we have completed only now.
Yes.
That is available for us.
So for next 2 years, you will be having the 16 million ton clinker to rely upon.
See, this till 2026, this 19 million ton will be good enough to meet the market demand.
Okay. And sir, this premium cement share ratio came down to 20% in this quarter. It
not came down, it is increased.
I think in the preceding quarters you have given 28% number. June and September quarters.
Ravi, please go through my presentation. Everything I have clearly covered.
Okay, because I have noted down 28% for June and September. That is why I was surprised. Maybe I'll recheck my numbers.
I'll read out 1 minute, please. Please hold on.
Sure.
The premium products have improved to 27% for the third quarter as well as for 9 months.
27%.
27%.
Oh, okay.
For Q3 as well as 9 months for both.
Understood. Okay. Great, sir. ठीक है. And so this lastly on the balance sheet, you're comfortable with this 5,000 crore net debt to EBITDA? Because why I'm looking at, you said in 12 months you'll be coming up, 12 to 18 months you'll be coming up for the Karnataka expansions, the board. So that is, I assume, somewhere in FY26, this project may start. So that year also you may have major capex coming through. So this net debt to EBITDA number may not meaningfully come down. Is that understand? You may be comfortable close to 2.5, 3x.
So net debt to EBITDA in percentage terms it will come down, number terms, but absolute number will remain same. That is the point.
5,000. Understood.
So that part, last 50 years, we never, not even single day there was a delay in repayment of loan or interest.
No, that is for sure, right, sir. Correct.
We are fully 100%. We are conscious of our leverage, so we will maintain. Even that is why I was telling to you again. So we have that non-core assets necessary. I will monetize that.
And what is the potential of those non-core asset monetization, sir? If you are able to do that.
See, for example, I'll tell you, I have 175 megawatt wind power. I have 100% ownership. 100% ownership is not necessary.
Okay.
Even with the 26% ownership, I can consume that power, wind power, captively. But 74%, if necessary, I can monetize.
Okay.
Like that, lot of opportunities available within the company already we created. Those things are already within the balance sheet. There's no need for any new expenditures. So that is why with confidently Mr. Vaidyanathan is telling that maintaining that for 5,000 crores, we are conscious about that. If necessary, that is why I am qualifying. If necessary, we will monetize that. Otherwise, there's no need.
So this power asset monetization which you're talking about, that you will remain at 26%. So that would then, if you sell out the 74% stake, will this not increase your green power costing then?
No, it will not, because 100% I'll be consuming. It is enough if you have 26%. Green power cost you are telling?
That windmill cost, which is negligible today because it is captive, fully captive.
Again, I have to see the opportunity cost. Suppose I am selling to the grid, I used to get 3 rupees. Today I have to pay. See, there are certain charges already you are paying. See, we will see. That is what I am telling. See, if necessary, that is why I qualified. If necessary, and we will compare with the cost, all these things, we will do that.
Right.
Even otherwise, I have. See, the windmill what we were managing before, I have thermal plants. See, even today, 100% of our production capacity is backed by thermal plant. Because of wind power, even I have shut down some of my thermal plants.
Okay.
If necessary, I will sell my wind power also. If the coal prices comes down, see, before 21, 22, my cost of generation was less than 3 rupees. That is why we are selling to the board and making some profit also. Now the cost of generation has gone up because the coal price has gone up. So these are all the opportunities. Already we created enough assets. So I am qualifying. If necessary, we don't mind monetizing some of the assets.
Okay.
Non-core assets.
Yeah. Great, sir. Great. Thank you. All the best.
Enough cushions are available within the company to take care of the liquidity problems.
Okay. Understood.
And it is easily monetable also. See, there is now the green energy became the pet topic to everybody. So monetization is not a problem. At any point of time, at least even 5, 6 people are after me. Why don't you do that? Already proposals are with me.
Thank you, sir. I'll come back in queue. All the best.
Thank you.
Thank you, sir. We have our next question from the line of Aditya Chheda from InCred Asset Management. Please go ahead.
Yeah, hi. Afternoon, sir. So, if I've understood correctly, monetization of these non-core assets will not be a priority. You will do it only if you feel the requirement to do so.
You are right. If you raise big concern, we'll do that. If you don't raise any concern, then I will not do that.
Got it. And next one, we've seen a sharp bump up in other expenses. So, is there any one-offs there, or If you could highlight what led to this.
There is no one-off items. If you look at the absolute expenditure, it is about 15-20 crores more, that's all. In some quarters, certain expenses will be there. In some quarters, expenses may not be there. So on a per ton basis, if you look at because of the lower volume in the quarter, it looks little higher. Whereas if you look at the absolute value, it is more or less the same. If you look at second quarter and third quarter, it remains almost close.
Got it. Thanks. That's it from me.
Thank you, sir. We have our next question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you for the opportunity again. Sir, this 1 million ton debottlenecking, so will it be at any one or two plants specifically or across the plants?
We have mentioned in the report that it is done in 2 plants.
No, sir, I'm not clinker. I'm saying grinding. We said 1 million ton grinding debottlenecking we are looking at. So this will be across the plants or any specific plant?
Not all plants, few plants.
See, also the opportunities are available. Even last call also I told you, see in at least 2 of our plants, one raw mill is available which is not running. So any point of time, if necessary, I can convert the raw mill also into cement mill with small capital expenditure. I don't incur small because whenever we have gone, for example, Aranagar third line, we have gone for big raw mill with most modern and fuel efficient, power efficient raw mills. Okay, in the process we have one raw mill extra. Same thing in Jayanthipuram. So if necessary, I can convert those raw mill into cement mill with least cost.
Okay, got it. And sir, this in the presentation we have said, so currently we have a 22, Odisha 1 million ton will take us to 23, then 1 million ton will be a debottlenecking, and then in FY26 we have written a 2 million ton, but Kurnool we have mentioned 1.5, so
we have rounded off. We have rounded it off.
Okay, understood.
And then we can do that as Mr. Vaidyanathan told you, with some blending ratio changes, not even 0.5 we can go, 1 million also can be increased.
Okay. I thought maybe 0.5 million ton will be a further debottlenecking. That's what I was asking.
It is there. No, it is available. That is why I told you, see, whatever I told you, I can convert raw mill into cement, but that is not taken into account. If necessary, we will do that.
Okay. Sir, just a
Shalan, please ignore this 0.5 million to round off. Leave it to us.
Yeah, I got the point. Sir, just one clarification. You said 3,000 acres you need to buy for Bhuvanali land. So total, how much we have already spent on that, and what would be the likely total cost, or how many acres we have already acquired?
See, the total cost is...
There is little confidence that what is the cost per acre, all these things we can't give. Please appreciate that. Okay, I can tell you what is the total number of acres required. So what is the cost per acre, all these things we can't give.
Okay, got it. And then lastly, in terms of the prices, so currently in January until now February, broadly if I have to look at in South and East where we operate, how much prices would have declined versus the average of the third quarter? Broader range would be fine.
The price drop is around 5 to 10 rupees across the market. Different markets have different...
So it is why what is drop or what is gone up depends upon relative terms. See, sometimes we may have increased invoices that might have been reflected. That is also called as drop. See, that is why I told you cement price is very, very difficult to give the guidance. And even tomorrow the prices can go up depending upon the demand and supply, depending upon different markets.
Yeah, no, I was not asking the guidance. I was asking till now broadly, but the range, how much it has already done a decline.
Some markets gone up, some markets has come down.
Okay, got it, sir. Thank you. All the best.
Thank you, sir. We have our next question from the line of Naveen Shahdev from ICICI Securities. Please go ahead.
Yeah, thank you for the follow-up. First, on the volumes, the mix between South and East has broadly remained same at about 75-25. And the overall volume growth is 10%. So does this imply that we are gaining market share in East? Because that region, I think, is not showing a positive trend at least for Q3, I think there was a dip. That's what our market.
All markets except West Bengal, only West Bengal we have some degrowth. All other markets we have grown.
I mean, to add that, don't look at one quarter to see the market share and all that. Look at the larger picture.
Year to date,
25%.
April 1st till today, only in Bengal we have small degrowth. Very small degrowth. Otherwise, all markets we have grown. Every state, it is Tamil Nadu, Kerala, Karnataka, Andhra Pradesh, Telangana, Odisha, we have grown. Northeast also.
Yeah, helpful. And just last question. Sorry, I didn't follow the previous participant's question very clearly. My point just to ask was the 16 million ton clinker that we are saying. So does it have more scope of debottlenecking over a period, or that is?
No, there's no big scope. Another 0.5 we can do. That's all. Another 0.5 to 1 million we can do. We are exploring another 0.5 to 1 million.
So that's good enough. Great. Thank you. Thank you so much.
Thank you. That was the last question for today, and I now hand the conference over to management for the closing remarks. Over to you.
Thank you very much for all the participants for their participation, and we hope that we would have given all the reply clearly and transparently. I wish you all the very best. Thank you very much.
Sorry, I was expecting so much questions also because Mr. Vaidyanathan has given very detailed press report as well as presentation.
Thank you. On behalf of Batliwala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.